You know, a lot of people think that you only need fundamental analysis. Right? That means you need to study just the fundamentals of the company, like the future, the profits, and so on. Whereas in our school of thought, you only need to look at the stock charts, which is called technical analysis, studying the stock price pattern. I adopt both of them because I see the benefit of using both rather than stand alone. So a lot of times people, they mix and match and they read about different books. For example, they hear that Warren Buffett don't use charts. Okay, you have to understand the differences of Warren Buffett. Right? When he invests as a business. Okay, so like he evaluate, okay, this business, am I buying it at the right price? You know, as long as this business is well run, then he will keep it forever. So my questions for you is, are you going in with the perspective of evaluating whether you buy the stock as whether this business is worth buying and you're going to keep it forever? But most people go into investing and trading, they want to grow their money and is not so much focused on, I want to buy a business. Right? So the thought process is very, very different. And most people are not so long-term. The reason I combine fundamental and technical analysis is so that I have a more precise timing to get into the stocks, right? So I will pre-screen strong fundamental stocks first. Then I look at the stock chart, right, to time the entry. So let's say someone tell you this is a great stock to buy. Of course, you should study it yourself first rather than listening to, friends' recommendation. Then what price do you buy? You need to have a price to buy. How do you decide that? So the fundamental doesn't give you precision. By learning how to look at a stock chart, you can actually look at the price action. That means based on the stock price and the candlestick reaction to the trend or the support, as well as the volume. Right? You know whether the momentum is there. There's a lot more buying coming in. The second part is it helps you to detect danger in the chart. Right? You can detect this trend is not normal. Right? Something is happening here, and you need to get up. Okay? Either you're going to get up partially or fully. Then the stock chart can give you that level of precision. So on the contrast, can you just use technical analysis and no fundamental? I don't advocate that because there's something called gapping risk, right? So if you just trade any Tom, Dick, and Harry chart just based on the momentum is there, you may be caught by a surprise where the negative news could cause the stock to bypass even if you have a stop loss, okay? Because you don't know whether the stock is way overvalued and you don't know whether this company, right, are those that are consistent in their results, or it could be just, one-time hype. You don't know whether it's a speculative stock, okay? So if you want to do that just within the intraday, it could be fine, but not anything overnight. So if you come for a webinar, I will show you systematically how you can approach the US market so that you can produce consistent results, all the way from selection, S, T for timing, P for protect, and M for multiply. We call it STPM process. Right? It's only through a systematic process that you can generate consistent results, right? Not random action.